Welcome, welcome. How are you? Glad to see that you're back. Welcome to Business Weekly. I'm Miss J, hostess with the mostest, drip strategist and boss methodologist. As you know, each week we examine business markets and economic movement through an executive lens. This is not a consumer show. It's a conversation for leaders, founders, and decision makers who understand that strategy starts with information. You're tuned into Love Bay Afrobeat Music Talk Radio, your home for insight, innovation, and inspiration. As always, please show your support, like, share, comment. Hello, we need to get these words out there. And most of all, subscribe. Stay connected on the go. So if you're on the road and you can't actually watch live, you can always download the Love Bay Radio app from the Apple App Store or Google Play. And make sure you visit our website to make a donation. We are about securing the bag so that we can expand the reach. Every contribution helps us to continue serving you. And we'd like to hear from you. So if you'd like to share, reach out to us at 437-778-3299. This week on Business Weekly, we're shifting the conversation around mortgages away from rates and products, which I had an amazing guest come on and talk to us about a few weeks ago. And we're going into what they actually signal about the economy. We know that the mortgage activity reveals where confidence, liquidity, and risk appetite are moving long before the headlines are catching up. And so in this episode, where is for the leaders who want to read the market, not react to it, because the smartest decisions are made with foresight, not fear. Today's conversation is about market signals, one that tells us where confidence and liquidity and risk are actually moving. So in these times of uncertainty, people are obsessing over interest rates, but experienced leaders know that rates are only part of the story. Activity or lack of it tells us far more than numbers on a screen. Mortgage behavior quietly reveals how people feel about the future, and as leaders who know how to read those signals, they're gaining strategic advantage. My guest today is going to be specializing in mortgages, but more importantly, they sit at the intersection of capital, confidence, and decision making. They see patterns where most people never notice, and today we're unpacking what those patterns actually mean for leaders. Please welcome to the show, Jermaine White.
Hey, Jai. Uh,
Hey, how are you?
I'm good. I'm good. Thanks for having me. It's always a
Thanks for
pleasure.
coming. I have to let the people know you came through on the clutch and I needed to talk about these mortgages. I reached out to my boy last minute. I said, Jay, I need you on the show for this topic. And you came through. And I know you got someone at 7:30 because hey, he's a busy man. And so we're gonna get into this conversation and have a solid, great convo. So let's start off with when you look at the mortgage activity today, approvals, hesitations, refinances, what's really telling you about market confidence? Sorry, what is it
Uh,
really telling you about market confidence?
or we look at the market, and before lenders look at the GDP, unemployment, etc. We look at behaviors of the buyer, investors. That's what tell the story, right? When clients
Mhm.
pause or slow down applications, it often reflects uncertainty about the market, right? Policies or economic direction, right? So so far in the market, things have been good.
Mhm.
I buyers are more proactive, and they are excited about what's to come this year. There's a little bit of hesitation, right? Because
Mhm.
everybody was waiting on the Bank of Canada interest rate announcement, and they've actually held on that announcement as well too. The prime rate has held. So and that's because the inflation rate has went above 2%. So that you know
Mm.
that
Yes.
some buyers now are a little bit hesitant because they were waiting on a lower rate change. But a spike or a drop in the approved mortgages often happens based on the broader economic
Right.
indicators. That's what affects it most.
I agree with you. And I mean, we see that that hesitation sometimes signals uncertainty, right? Not just
Yeah, yeah,
affordability. You know what I mean? So
yeah,
you're
yeah.
right when you're talking
It,
about this.
it's more uncertainty than the unaffordability aspect of it,
Mm.
right? Yeah.
And you mentioned had to me when we were talking that approval volume often shifts before the broader economic indicators come to play. And I thought that was
Yeah.
interesting because sometimes we don't think of the things that actually shift the markets, like commodities shifts markets very heavily, you know. I mean,
Yeah.
hey, run out of chickens, we got a
Yeah, yeah,
problem.
yeah, yeah, yeah. There you go. There you go. There you go. They and lenders too, right? Lenders
Mhm.
nowadays. I was always mentioning to my clients that the underwriting process of the lenders nowadays is a lot stricter. So it's not just clients that are paying attention to the market or the eye chicken prices, as what you call it, but also the lenders as well too. Lenders are requiring tighter documentation. They want to see where the finance is coming from. They want to understand affordability more than anything else, right?
Mhm.
Because in 2024 and 2025, unfortunately, we have seen a lot of for power of sales,
Right.
right? Not so
Yes,
much the fault of the market, is more so the fault of misunderstanding, miseducation,
that's so
right?
true.
So
That's
we are
so
trying to
true.
avoid that in 2026.
You talk about lenders, are being a little bit more scrupulous, or scrutinizing, the finances of people that are applying, and I know that a lot of the bigger, well, what I was reading was a lot of the more high end real estate leaders are waiting for the right time. From what you see, just on the ground running here, what does waiting actually cost people?
Um, you know what? Many people do wait, right? But what the opportunity cost of waiting is, every day delayed, right, could mean
Hmm.
you pay more for the property, you pay higher interest rate, you lose that
Hmm.
leverage,
Right.
right? Or you even miss out on a strategic advantage, right?
Yeah.
Because sometimes, especially Scotia Bank, right? Some banks like say Scotia and other banks, they come out with attractive mortgage products that is more in tune to a particular client's need, and it also assists with qualification, right? Scotia came up with one in September, in August. It blew the whole market away. They came back
Hmm.
out with another one in October, right? And what
Mm.
what this does is, if you don't act decisively, and plan to capture that value, you may lose it over time,
That's true. And then
right?
they say opportunity cost is really calculated, right?
Very, there you go, there you go. So,
Yeah.
if you wait emotionally, that can be
Hmm.
costly. But if you
Hmm.
wait deliberately based on data-driven knowledge, then that could be smart, right? So
Right.
if someone say, okay, I'm gonna wait, but their waiting is based on emotions,
Mm.
right?
Right.
Then that can be costly in the end, because they can lose out on this amazing product, or they can lose out on the price of the property, etc., on the value,
Hmm.
I should say, and pay a higher price. But if you're waiting based on data driven analysis, then that's a lot smarter,
You're
right?
right.
So it
Yeah,
depends on, the reason behind the wait for the client.
that's true. What do you think about the in terms of, we know that there's specific criteria to getting A lenders versus B lenders. Do you find that the lenders are changing the criteria? Like, are they, for example, 630 or 650 might be a great credit score for an A lender, but are they raising it now to say now you have to be in the 700s, or are they still kind of still holding to the same type of criteria they used even before pandemic?
And that's a very, very, very good question. Lenders definitely are changing the criteria. Now I'm seeing now where BMO has changed the interest rate from 600 to 630 to qualify. Right.
Mm,
Some A lenders now, if the credit score, even B lenders at times, so if the credit score is say 600 or 620, 610, they will still qualify the client, but be an explanation, right? So we have to explain
mhm,
to the lenders why is the credit score so low, right?
mhm,
And as we look at other B lending products as well too, equity based products, it's the same thing. So it comes around to explanation. Once we can explain the credit score, say, okay, the credit score is 600, right? The lenders would prefer a 650 or 680, but what's the reason behind the 600 credit score, right? So once the
mhm.
application is a strong application, and we have a good explanation behind the score, at more oftentimes than not, the clients will qualify, because sometimes, life happens, right? And
Right.
sometimes, maybe the client fell in on bad times, they may lose their job, a family member got sick and they had to use their credit cards, for the hospital bill, or as we
Mm-hmm.
say, chicken price went up, right?
That's
So
that's
and
right.
yeah, and
Don't
they have
even
to
look for
use.
the oxtail anymore. The chicken
Don't
price
lose
done gone
right,
up.
yeah. You see what's going on in the economy, right? And
That's
that
it.
may that may increase their borrowing, right?
Mm-hmm.
And bring down their credit score. So once there is a strong file behind the low credit score, right? Oftentimes or not, we can pass it with the lenders. But I've
Mm-hmm.
seen a lot of lenders are increasing, that credit. Yeah,
Wow, that's
yeah,
good to
and
know.
I'm expecting I'm expecting to see more lenders follow behind BMO,
Mm-hmm.
increasing the credit score as well. Lenders offer different programs that you need a 680 credit score and above, right, to capture those programs, but you can still qualify with the A lenders with a 600 credit score.
Hmm. So there, if you're so check your credit score, people. And I think this what it tells me is that there's that strategic timing versus emotional timing is now so much more important because
Mhm.
what it tells me is that I could be sitting and waiting for the market to tell me that this is the time to jump into a mortgage. But if I stay, keep the pulse on it, check on the banks, connect with the mortgage lenders, and really find out what's going on. More than not, I'm hearing that you could probably even get a good deal before the market tells you it's going to be a good deal.
Yeah, yes. Most often that what I always tell my clients is, keep paying attention, keep looking, check in with me, and I check in my clients as well too,
Hmm.
because you have down payment assistance programs, and a couple years ago the down payment assistance programs, your credit scores would start at say 500. Now
Right.
they have increased the score since last year to 600, and these down payment assistance programs allow you to qualify for a mortgage with 5% down, but only with a B lender, not a A lender. So those clients that cannot qualify through a A lending product with 5% down, they can still go to the B lending
Hmm.
market and qualify with the same 5% down, but the credit score got to be 500. Sorry, 600, right?
600.
So
Yeah.
so there are opportunities for clients, and so don't shy away from the market,
Hmm.
right? Don't shy away. Just dive in, check it out. As what I say, strategic planning,
I
data
love
driven
it.
analysis is what you should do, not emotional driven decisions. We don't make emotional driven decisions when we are talking about money.
Those are facts. And we know that it takes time, especially when it comes out to the public documents that are indicating whether it's the stock market or you're looking at the exchange. That information doesn't come as fast and readily as you reaching out to your local bank or a
No,
lender, right? Where
yeah,
you can get that
there you go.
direct
Yeah.
information in minutes. I
Right.
love that.
Yeah, and
Well,
again, reach
uh-huh.
out to the mortgage agent, because the mortgage agent, they have more access to different lenders and lender products than the bank. The
Better
bank
than the
only
bank.
has
There you
bank
go.
only has one guideline, one product that they offer. I work with over
Good point.
56 lenders, so 58 lenders, so I have
Damn.
different products that these to suit
You a
every
pimp.
client, right?
You just camping these things. I love it. I love it. Thank you. Good evening, Miss Tara from Vegan. Tara's Vegan Cuisines in the building. I love when businesses are tapping in, gathering this information because it's all going to play part and parcel of the empire. And if
Mhm.
you are now tuning into Business Weekly on Love Day Afrobeat Music Talk Radio, your home for insight, innovation, and inspiration. We want to ask you to show your support, like, share, comment, and subscribe. Stay connected to by downloading the Love Bay Radio app. I got all this new information that I get to plug now, and so I'm learning it. So stay connected on the go by downloading the Love Bay Radio app from the Apple App Store or Google Play. And visit our website to make a donation. Every contribution helps us to continue serving you and expand our global reach. And if you'd like to share anything, please reach out to us at 437-778-3299. I'm sitting here with Jermaine White, mortgage agent extraordinaire, and we're just talking about how the market signals are helping people to really focus on the signal versus it being a product. So let's jump into talking about a liquidity over rates. Why do
Mhm.
seasoned executives focus more on liquidity and flexibility than on chasing the lowest rate?
Because the lowest rate is not always the best rate, right?
Mm,
Pure and simple, right?
pure and
Cashing
simple.
in allows you to pivot quickly. Cashing in allows you to invest. it allows you to expand, right? It allows you to weather unforeseen challenges, right? Paying a slighter interest rate for flexibility can save you millions, right? If the
Hmm.
market shifts, right? But if smart borrowing is a tool, right?
Mm.
So it's not basically a risk, right? People do lowest
Yes.
interest rate because they're looking at the risk, right? But smart borrowing is a tool, right?
Mm.
And executives generally plan for multiple futures, not just today's rates. We executive plan for what might happen in the future with the market and etc. So
Right.
the cash in hand always is slightly better than chasing that lower rate, because when you chase a lower rate, that ties up your funds, and you
Mm.
know um you know it may take you down the road of higher interest rates in the future.
Right. That's
you know
true.
so
Yeah. And we know that leverage used intentionally supports growth, right? It's just like when
there you
you're
go.
investing in, TFSAs, or if you're investing in the mutual funds or getting an index or whatever the case is. I always encourage get in early, even if it's $2,500 a month, because that compounding, you never know when the market shifts and there's a really good interest rate happening, and your
Yeah.
money doubles, or I shouldn't say,
Doubles.
but it,
Yeah.
it gets up there, right? It gets there faster than waiting to hear
And
that
waiting.
now is the
Yeah.
time.
Yeah.
Exactly.
Because I've seen deals where clients show slightly higher interest rates, right?
Hmm.
And but guess what happened? They kept their capital. They have access to more capital. So when a new
Hmm.
opportunity comes around, they can move fast, right?
Yes.
While others that lock into these lower interest rates, they are subject to rigid financing if they want to pull these funds out,
Right.
right? So it doesn't always make sense to always chase after the lowest rate,
The grass is not
right?
always greener on the other side. It might look from a
No,
distance, but sometimes it's not, right?
no, it's
Welcome.
not.
Another business is logged in and sharing love. Empressing is in the building. Please check her out at empressing.com. Amazing. I'll be wearing her jewelry at my next show, but she has the best jewelry.
Oh,
Straight from Ghana, the
I'm looking for some
motherland.
jewelry as well too. So,
Let me tell you, she has some amazing men pieces. So get
okay,
connected. I will definitely
yeah,
send you the link and you
send me
can
the
check out
link.
her
Yeah,
website. Yeah, you
yeah,
definitely would rock some of that Prince magic. You get a little bit
yeah.
of that Ghana Prince magic.
There you go. There you go.
There
And you
you
know
go.
what?
We're all meant to be kings, and
And I'm all for supporting black business as well too. So,
it's what it's
uh,
about. This is what we stand on, and we're all 10 toes down on building our economy.
oh, I think we lost Jai. Yeah, yeah. I think we lost Jai for a second there. Think I'm gonna give Jai a call, guys. Think we lost Jai for a second there. Give me a minute. Yeah, I think we lost you.
I see myself on the screen, but I'm grayed
Oh,
out.
oh, 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 there you are. Okay.
Oh, okay.
Yeah.
I've been
Yeah.
found. Thank you. You see, this is the kind of network you want. The people who say, listen, man, let me go find my girl.
Technology.
That's the beauty of it, right? You gotta love technology. You gotta
Hmm.
love technology. Okay, so we were just delving into liquidity over what were we talking about? Over rates. Yeah, we were just
Wait,
talking
yeah,
about
yeah,
that.
yeah.
Yeah.
Liquidity over rates, we're
Which
talking about. Um,
Yeah, which leads to risk, because I think a lot of people are nervous, right? They especially if they don't have knowledge about the industry, they tend to think that risk is negative. But how do you see leaders misunderstand how any question is, how do you see leaders misunderstand risk when it comes to borrowing and capital?
Yeah, and that's an amazing question, right? For lenders, for leaders, right? Risk is misalignment. It's not debt itself, right? It's basically you have to look at it at structured debt versus uncontrolled exposure, right?
Hmm.
So risk comes from poor planning, right? Not from borrowing. Okay, so it all comes down to preparedness, and that lowers the perceived risk,
I
right?
like that.
So
Say that
so
last line again.
so it it comes down to preparedness, right?
Hmm.
And preparedness lowers perceived risk. Okay,
Right.
so it's basically about knowing your scenario, right? And what options you have to reduce that fear,
I hear that. And
right?
again, being informed really
Right.
helps that process, right? And I
Yeah.
think that's where a lot of people, I think in my experience, watching people go through home ownership or trying to run a business or trying to take on something big in their life, they often view risk as very negative, but
And
when
you
you have
shouldn't.
people who are informed like yourself, right? You're level 2 mortgage agent working with almost 60 lenders, then your risk is minimized greatly because you have the knowledge, right? So it's always
uh,
important to tap in to
Tap in.
what these executives are doing, right? These high level people with lots of multi-million dollar real estate, they're tapping into somebody who understands the markets and could see the signals before they even come. So,
They,
right?
they, yeah, there you go. And I speak because, as I said, right, with risk, it's more it's more misalignment. It's not per se the debt itself. And
Mm-hmm.
a lot of people, when they look at risk, they look at the debt itself, and that's where the fear comes from, right?
Yes.
That
Yes.
that 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 debt, or how much they're gonna spend out of their pocket, and what it's gonna cost them,
Yes, I
right?
watch shows like I just want to say hello to Miss Lenice, Crown Beauty Len Len, the version of Mrs. Saga. Lots of businesses coming in today. Welcome everyone to Love Bay. We'll reset the room in a few seconds. But just as you were saying that, right? There's when you watch these shows, because people watch the $1 million homes and $1 billion listings and stuff like that. Do you feel like, and this is just your personal opinion, it's not fact, but do you feel like those people understand at the highest levels of the game risk? Because those are homes that could go down in value real quick.
Yeah. It can, right? But I don't think they understand fully at the highest level of the game. But what I think with these people is they go out and they get information.
There it
and,
is.
and, and and that's the most powerful thing. For example, I had a client called me the other day, and he said, Jermaine, you know what, I have two properties I want to buy, right? There's
Hmm.
one property up the road, $50 million, $50,000 more, right? And it's gonna cost me a little bit of money to fix it up. Then I
Right.
have this other property where it's mostly land, but I gotta break the property down, tear it down, and rebuild, right?
Hmm.
And I said to the client, listen, okay, then you're gonna spend $50,000 more on this property up the road, but guess what happened? In the long run, it's gonna cost you less, as opposed to tearing
Yes.
this property down, because now you got to look at zoning, you got to look at appraisal. If the property is beside a lake, so we got to look at level one and level two appraisal,
Hmm.
right? We got to look at
Yeah.
environmental. We got to look at so many different things, right?
Right.
So it comes down to education,
Education. That's the
right?
key.
So so
That's the
so we, we
key.
we don't need the highest level of experience, because clients a lot of times come to me and they don't have the highest level of experience, but guess what happened? They are willing to
Mhm.
learn, right?
I love that.
Germany, I have some equity in my home. What can I do with it? I went to
Yes.
the DR. I saw this beachfront property. What can you do for me? Right? How much is the
Hmm.
beachfront property? Where is it? Then I look at the marketability in the area, and I say, okay, then it's a good idea if you could get it for, say, this amount, and I would give it that extra amount, and then by next year I pay it off. I actually did a
Hmm.
deal like that last year, December.
Nice.
Someone wanted to go to DR. He bought it for 60,000. I gave him a $100,000 line of credit, so
Hmm.
he had an extra 40,000 just for unforeseen expenses. Because
Right.
in these there are unforeseen expenses that the client
Yes.
may not know about,
Yeah.
and I'm gonna pay it off this year with TD,
Love
right?
that.
so it comes down to education. So don't be scared to use your money to invest, right? As long as we have a plan, right?
Mhm.
Then we can see it through.
So to wrap this up, so I can get you off to your client who's eagerly awaiting all of your knowledge. If leaders or listeners today were taking away one thing from today's conversation, what market signal should they be paying attention to right now?
What market signal they should pay attention to? What they should pay attention to at the this moment in time is the approval ratings,
Hmm.
right? Fewer approvals mean there's a caution in the market.
Hmm.
Higher approval rating means okay, then the lenders have appetite to lend,
Right.
right? So
Makes sense.
what I would suggest is look at the approval rating in the market.
Love that. Okay, so you heard it right here. Before you leave, Jermaine, where can they reach you? Where do you want them to reach you? And why they should reach you?
Well, you know what? They should reach me because you know what? I care about my clients and I provide a white glove experience.
I like
Okay.
that.
And they can reach me at 905-598-2669. That is the quickest way to me.
That's it. Because I know I try to text him sometimes. This guy don't watch phone, but he will answer
Yeah.
it all the time, all the time. Thank you so much, Jermaine. I'm giving you a whole minute to spare. Thank you for being here. Thank you for covering such an important topic that's trending very hard in the market right now. And I continue to invite you back so that you can continue sharing your wisdom. Have an amazing evening, and I'll talk to you soon.
Thank you. Take care.
Take care. Yes, everybody, if you're just getting into the room, that was Jermaine White, mortgage agent extraordinaire. And we were just really talking about what's the market signaling when it comes to mortgages and how right now, don't wait for the market to tell you what to do. Start to acquire the knowledge, right? Reach out to mortgage agents if you have one, if you don't. Connect with Jermaine White, help him help you to understand what's going on and where the market's going even before it comes out in public documents. Now, you're tuned into Business Weekly right here on Love Bay Afrobeat Music Talk Radio. So welcome. This is your home for insight, innovation, and inspiration. And to show your support, please like, share, comment, and subscribe. And stay connected on the go by downloading the Love Bay Radio app from the Apple App Store or Google Play. Now, we are looking to expand our reach, so visit our website to make a donation. Every contribution helps us to continue serving you. We'd love to hear from you, so reach out to 437-778-3299. If you have questions, please feel free to put them in the chat. My amazing producer is going to ensure. And I think I'm not frozen anymore, so I hope were able to catch the rest of the show. And of course, we always do the replay right after the next day, 12 o'clock. Now, what's in the news? Well, I even have a whole slide for that. We're going to talk a little bit about what's going on. Today, technology just wants to try to take over, and we will not let it. So let me share. I'm also going to put Jermaine's IG here. So I'm going to share that for a quick sec so that you can follow him on Instagram. He also has an Instagram, so make sure you are following him there. Mr. T, if I can get you to throw that up just for a few minutes. And then we're going to talk a little bit about what's happening in the news. So there it is. Just follow Jermaine White 1 on Instagram. He also provided his number. If you didn't get it, please feel free to reach out to me at info@empirebydesign.ca, and I will make sure that I can get that information for you. So what's in the news? Well, lots of things are happening this week in the news. Elon Musk reignited the privacy debate after a new lawsuit accused Meta platforms of misleading users about WhatsApp end-to-end encryption. Now, we've known that WhatsApp has the strongest encryption rate. Oh, welcome, Captured by Shani in the building. If you're looking for that mini session, people, she is the photographer extraordinaire. So make sure you reach out to her at capturedbyshani.com. But going back to what's happening with the WhatsApp, International plaintiffs are alleging that despite public claims, WhatsApp may store, analyze, or access private messages. Meta has strongly denied the accusations, calling the lawsuit frivolous and reaffirming its encryption standards. Amid the discussion, Musk has publicly questioned WhatsApp and even Signal while promoting XChat. Can we say marketing plug? That's called real leverage. Okay. Through X, he has yet to release detailed information about its own message scrutiny. Now, why am I bringing this up? Why does this matter for executives such as yourself, all the businesses who are here today? Well, for leaders, this isn't a tech debate. It's a trust and risk conversation. The platforms your teams, your partners, and customers rely on are now under scrutiny, and privacy claims are becoming legal and reputational liabilities. In today's market, credibility is currency, and executives must think carefully about where communication, data, and decision truly making truly live. So as you're getting out there and you're using these platforms, especially if you have sensitive information for your clients, please ensure that you're utilizing the proper platforms. Sometimes they give you the free ones, but those might have a lot of access entry points for people who can get in there and really wreak havoc, right? Also, too, President Donald Trump this week said he has no concerns about the sharp decline in the US dollar, calling it great. Amid growing volatility in global bond markets, he argues that a weaker dollar benefits US manufacturers, energy producers, and exporters by making American goods more competitive overseas. However, the Treasury officials and economic leaders have long warned that a soft dollar reduces purchasing power and can fuel inflation. And the dollar recently hit its lowest level. This is a good time to go and buy it in nearly 4 years and fell further after Trump's remarks. So if you shop at Shein, Timo, and all those other places that take US, honey, you might want to get in there and get your sales on, right? As investors reacted to tariff threats, foreign policy uncertainty, and a broader sell America narrative in global markets. Now, why does this matter to you? Well, as business owners, operators, or executives, currency strength isn't political, it's strategic exposure. And a weaker dollar may boost exports and reported earning, but it also raises input costs, pressures the margins, and increases inflation risk. So whether you're a multi-million, billion-dollar company or if you're a multi-thousand-dollar company, every one of these types of situations impacts your business. So now you have to plan for volatility as policy, not stability. You want to reassess your pricing, supply chains, and international positioning in a market where currency signals reflect confidence as much as economics. Now, what's going on here in Canada? Well, Canada's Prime Minister Mark Carney this week declared that the old rules-based international order is effectively over. That was something that went on. It's viral. His speech was amazing. I had very insightful, I have to say. Speaking in Davos, Carney said that decades of global integration have given way to a new reality where trades, tariffs, and financial systems and supply systems are increasingly being used as economic weapons. While he didn't name names, his remarks come as the US, under Donald Trump, leans more aggressively into tariffs. As you know, he was trying to say that if we were to deal with China, he was going to go 100% tariffs on us, right? And so that aggressive move is, in his mind, is helping him to leverage and create unilateral decision making. Carney warned that when integration becomes a tool of coercion rather than mutual benefit, countries can no longer rely on the systems that once guaranteed stability and prosperity. Now, why does this matter for you as business owners and executives? Well, this is a strategic wake-up call. The assumption that global markets operate under shared rules is breaking down, and the economic power is now being exercised through policy, pressure, and positioning. So leaders, you have to rethink risk, supply chains, partnerships, and national exposure. Because in the next era, resilience matters more than reliance. I'm going to say that again. In the next era, resilience matters more than reliance, and strategy must be built for fragmentation, not comfort. So if you have questions on these, please make sure you're digging in and you're staying. As you know, Business Weekly has moved towards a more market insight and executive lens conversation. And so I'm always looking to bring you things that are happening in real time as closely as possible when I get to my show. If you're now tuning in, thank you for being here. We've had a powered conversation. Sometimes shorter is sweeter. But you're tuned into Business Weekly on Love Bay Afrobeat Music Talk Radio, your home for insight, innovation, and inspiration. And as always, I'm your girl, Miss J, your drip strategist. We want you to continue showing support. So invite a friend next week. Invite a friend next week and have your questions ready. We're definitely putting out different types of shows for different topics, different people, but everything is based on helping you to continue to grow your empires with insight, innovation. And as always, you know my saying, I'm going to help you build it with drive, resilience, innovation, and progression. So what do we do from here? Well, you're going to go check the mortgage rates. Okay. Don't stop. Make sure you get out there, start planning now so that you can have what the ability to maximize on the market signals that are here and some that are going to be coming down the pipe. So I'm going to be signing off. I want to thank you for being here. I hope you have an amazing Thursday. I'm going to go and have an amazing evening as myself. And I want you to tune in next week with me right here on Business Weekly on Love Day Afrobeat Music Talk Radio. And as always, keep those wings up and let's keep flying. Talk to you soon. Or I'm still on here. So if you have a question, let me know. Well, since I'm still on here, I'm going to invite or shout out to some of the businesses that I see here today. So we had Empressing. Check her out at empressing.com. She is a purveyor and curator of fine African accessories and home decor. I have pieces that are amazing. I implore you to check her out. Tara's Vegan Cuisine. It is winter outside. Yes, it is. But if you order Tara's juices right now, she makes lemonades, beautifully flavored lemonades. And you can check her out at tarasvegancuisine.com. She has 6 flavors. And let me tell you, all of them are amazing, especially on a night like this. Drop a little bit of that rum in there, honey, and you are going to be having your own party for the evening. So make sure you check out hers. And don't forget to check out Captured by Shawnee. I mentioned her earlier. If you're looking for an amazing experience to curate your confidence and or even to just get great headshots for your business, please make sure you're checking with her. She runs mini sessions at amazing prices that are going to help you to build your portfolio. And not last but not least, Crown Beauty. I have to give a shout out. People are loving my crochet lock twist feel. So I want to give a shout out to Crown Beauty, Miss Keisha and Lenice. I want to shout them out for saying thank you for always keeping my crown beautified. Now that's really all I got to say. So Mr. T, you need to take me off this screen, honey. But I want to thank you again for coming out right here on Love Bay Afrobeat Music Talk Radio. Yes, that's what's not in the news.